Hey everyone, thanks for joining us here in the charts. This is the Market Beast, Napoleon Macro. Today we'll be exploring a very beautiful, simple setup on the naked brand chart so that everyone is going to understand this in order to determine whether or not what we're looking at in the market is an official break up higher and specifics in the chart to look for in order to determine this, if it's official. So we'll do that right now. So welcome back, loyal family. If you're new here, we explore price action. Welcome in all our new subscribers. Let's go ahead and go over this very simple chart and dive into the charts here, shall we? So today's August the 25th, 2021, and the current price of naked brand is going to be 68 cents, slightly positive 9.1% for the day. Okay. NAKD, by the way. This is not a stock recommendation. We're just going to go over retracement levels is, I guess, the most important level if you're interested in entertaining something in this market, okay? Not financial advice. So what we're going to do in this video is pull up the Bollinger Band, a kind of a naked Bollinger Band, so to speak. So here's the lines I have. Okay, so it's a three-part. It's a green, yellow, red light setup, basically. Okay, green, yellow, red light, okay? Green, it's happened twice in the past, and maybe it's going to happen again. So let's just kind of start from scratch just so that I can paint a crystal clear picture so that everyone will understand where I'm coming from when I pull up the market. All right, so we're looking at the Bollinger Bands. Let's go ahead and reveal that. Well, it's actually not the Bollinger Bands. What I've done is, if you are familiar with Bollinger Bands, here's how it normally would look on the Bollinger Bands. But what I've done is I've actually erasing the outer lips of the Bollinger Bands. If you're new, Bollinger Bands is just simply where the price actually takes place most of the times within these two blue lines, the lower lip, so to speak, and the upper lip. Like most of it takes place within the Bollinger Bands. But we're only going to focus on the mean average line on the Bollinger Bands, that orange line right there that you see. And just kind of makes sense because I really want to break this down. So if you want to pull up what I have, just pull up your weekly candles, pull up your Bollinger Bands, erase the outer and the lower lip, and then you're just going to have it's called the basis, something like that, on the tradingview.com that I have here, guys. Pardon me, guys. I'm really unprofessional, okay? I do the best I can. All right, so the three-circle setup. The first thing we're going to look for is the green circle, okay? And it's really simple how we find the green circle. The market moves down or the price action, it fluctuates. It's up or down. The first thing we're looking for is the initial touch point of the orange line, but really it's going to be a rejection, okay? So we're looking for the green circle rejection, okay, on the price action. Second thing is really simple. On the orange circle, we're looking for two weekly candles bodies to close above the orange line. Really simple, okay? And that's the second thing. The third thing is if the market does close two weekly candles above the orange moving average line, again, the weekly candles, we should get that red circle explosion. Really simple. It's happened once, okay? This red X is here for a reason. The reason that it's there is because if I put like a line right here, right there, the price action, what we look for on the channel also is higher highs and higher lows. And if you notice how the market went up, down, higher, low, up, exploded, and it should have continued higher, but unfortunately it actually broke below the support level. So that's why we got an X down there. So I just wanted to explain why the X is on the chart, okay? Well, let's get back focused on the circles, okay? Really simple, the same thing. We're looking for the same setup, okay? Weekly candles, okay? We get the move, okay? Whether it's down or to the sideways, doesn't matter. We're looking for the green circle, okay? If you can't see it, there's a wick there at the orange line. It's a rejection. Beautiful. We got the rejection. Next thing, what are we looking for? We're looking for two weekly candles bodies to close above the orange line, the mean average line. Beautiful. We got that. And what's next? Rip to the upside. That's right, guys. We got an explosion that reaches all the way up to the red circle up here. So the check mark down here actually represents the market never revisiting the lows of the price activity down here. So that's why you see that green line there, and notice all the price activity that's taking place down here. It never compromised that green line, which is at like 6 cents, okay? So that's why we have a green check mark there as opposed to the red X, okay? That's not really important. I just want to kind of let you guys know what you're looking at on the chart. Let's get to the important part. All right, so here we are present day. We are potentially going to experience the same thing that we've already plotted out on the chart. in the past. I guess one thing that would probably be a good thing to reference is the most recent lower levels, which is at about 47 cents. Please check our videos that we're leaving links in the video to check and make sure that we're staying consistent with the 47-cent level. Okay, the market has not compromised that lowest level as of the recent price fluctuations, which is good. So hopefully this area can get a check mark as I leave my lines on the chart for you guys, and we just kind of stay consistent. All right, so can I get to what we're looking at here? All right, so the first thing is the green circle. Okay, the market moves down. Okay, we get that green circle rejection from the orange line. The market moves down. Okay, makes a higher low, which is good. And right now we're in the midst of a potential 2 weekly candles body to close above the orange line, the mean average line on the Bollinger Bands, weekly Bollinger Bands. Okay, so let's just say, for example, okay, now the guys, this could change. Please don't start buying this stock, guys. Do your own research, okay? Please, please, please. All right, let's just say the market actually closes something similar, or if it pushes a little bit down, as long as it's above the orange line. The orange line is currently at 59 cents. So if the title suggests one level to watch right now, that is the level, 59 cents. So I'm talking so aggressive, pardon me, guys. 59 cents. If the market can stay above 59 cents over the next 2 days and 4 hours as this active weekly candle is developing, then that's the one level, okay? So that's the only note you have to take as a retracement or potential. And even if this market closes above 59 cents, that would not be the initial weekly candle's body to close above the mean average line. What we want to do is see 2 full candles bodies, not counting the breakthrough candle, which this could be the breakthrough weekly candle. We want to see 2 weekly candles. So that would essentially mean that on the 2 next weekly candles, which is here and then here, so kind of realistically, what we're looking at is a date. In terms of the date, is September the 13th, 2021. If we can get 2 weekly candles to close above the 59 cent level, and we're in September the 13th, 2021, expect the market to move higher, guys. I'm not sure if it's going to explode. So again, if it doesn't explode, that's actually good, because what you want to do is just see the slow climbing, walking up the stairs. Those are the sustainable moves, guys. You want to see 10% up, 5% down, 4% up, 2% down, 15% up, 5% down. The structural fluctuations are the sustainable moves. The 600% moves in a day, more likely than not, guys, you have to get back most, if not all, of those profits back if you didn't take profits, okay? So unfortunately, I do have an alternative price target. We did bet the channel saying that Naked Brand could likely go to $5. Unfortunately, we're going to have to downgrade that price target just a little bit. I mean, if it gets up to this level, guys, I'm not shutting the channel down. If it goes up, because we have a price target near $4.30. If you're new, you're like, dude, what are you talking about? Shut the channel down. We bet that this market would actually go to $5. I'm not sure what month we bet the channel. But we're saying that if there's no reverse stock split and it doesn't go to 0, then yeah, it will likely go to $5, and we bet the channel. But not in September. So please, with the messages saying, hey, shut your channel down in September. No. We said by September, we should see some sort of fluctuation, just kind of giving it as a reference point, not saying it will happen in September or else we'll shut it down. Please, guys, kindly refrain from leaving those messages. I mean, you can leave them, but I'm just going to ignore them, guys, kindly, respectfully, okay? I appreciate everyone's support, okay? All right, but yeah, again, September is when we're looking to see. Right now, we're getting activity. So, I mean, so far, so good. You have the one level, 59 cents. Let's give the market another 30 to 60 days, not for the $4 target. Let's give the market a good 30 to 60 days to see if we can stay within the relative range that we're currently within. As our previous video suggests, we are still range bound. If you're new, the range is in between 47 cents all the way up to 84 cents. I got to change that color there. It's still perfectly range bound, guys. You got to be patient. The markets will likely move in the directional, range or area that we predicted. It's not guaranteed, of course. I mean, I'm just a speculator. I don't know. But we do have technical confirmation that these levels will likely take place. Okay, so there's the range. But really just one level, 59 cents. And we're going to close the video out. So you know what to look for. All the information is here, guys. Rewind it back. Hopefully this is enough for you. We're not telling you to buy this stock right now. When you buy on green days, you typically experience a negative position in your portfolio, okay? I buy on negative days, guys, okay? Most of the times, all right? So hopefully this was useful. Hopefully this is straight to the point. And enough rambling. So let's go ahead and cut the video out. So go ahead and leave an appropriate thumb below the video if you enjoyed the blueprint, and leave a comment so that the YouTube algorithm can promote the video. If you're new, we also explore alternative markets if you're into Bitcoin and altcoins. So kindly subscribe, hit the bell, and we'll send you that information when it is available. Ladies and gentlemen, I thank you for your time. Thanks for stopping out. Again, execute your strategies. Always be kind. Keep that positive energy flowing. We'll talk soon, and bye for now.